Good afternoon, Trolley. This is Andrew coming to you with a recap of the information from the meeting this morning, and wanted to go over this with you for anybody that was not able to be in the meeting or that wanted a recap of the information that we went over. So we spoke about pitfalls in the process and went through a few of these bullet points, which I'll talk about a little bit and go into a little bit of detail on how to best avoid these pitfalls. So this is not a fully exhaustive list of the pitfalls that can arise during the process. And for anybody that's new, this is a good starting point, but experience is going to tell you that there's more than just these. So start keeping track of the pitfalls that you see pop up during your transactions, and we'll get into greater detail about those going forward as well. But a few of the things that really we wanted to focus on today were pre-qualification versus pre-approval, short closing timeframes when you go to submit the offer, slow buyers in providing documentation requests, and slow to commit to a lender, low appraised values. We have not seen that a lot yet, but we do see that on occasion. Dirty CO 100s, the repair addendum, and unknown addendums that unknown change addendums that the lender is not aware of. Agent compensation that could cause a problem with cause many problems. Number one, it could cause delay in the closing because if we don't receive that information, then until the closing table, then we have to go back and put it back through underwriting, which is the same for any change addendums or closing cost credits as they relate to the repair addendum. Also, with repair addendums, if we get a repair addendum at the very last minute and it says that it's in lieu of repairs, that then causes a problem because it cannot be in lieu of repairs. That opens it up for the underwriter to ask about the repairs and whether or not they've been completed. Timeliness of binding insurance, that is a big thing, and it's particularly right now because we are in the dead heat of the hurricane season, with a storm actually even in the Atlantic right now that is projected to hit us in the next, or be named probably within the next week, at which point insurance carriers are going to stop binding insurance policies. And if you have a loan that's in process that has not bound their insurance yet, I would have them bind it as soon as possible in the next few days to make certain that your closing does not get delayed because their insurance is not in place yet. Last minute power of attorney requests. Again, this is something that's important because a power of attorney is not just something the buyer can decide at the last moment. It has to actually go through a compliance review by our legal department and then verified that they have good reason to use a power of attorney for the closing rather than being there in person. Obviously, another one is borrower opening new debt or changing jobs during the loan process. The reason for those, obviously, is because it would impact their ability to qualify, possibly, even within debt. Even if it does not affect their ability to qualify, it still could delay closing because now we have to go back and vet that new debt and verify that it's been paid on time, and verify that it does not impact their qualifying ability. Again, these are just a few of the things that can come up, but the most important aspect of all of these and any pitfalls that come up in the process is communication, clear communication, having checklists for the important things that are needed during the loan process, and of course toward closing, so you can start checking to see that you have sent all of the addendums. We have all of the RESPAs, agent commission, all that stuff. So keep those checklists. And then as it relates to the buyer, setting the proper expectations, not only with what they should expect from us, but I think where we're missing it very often is setting the expectation with the buyer of what we expect from them. This is a partnership with the buyer, and we have to make sure that they understand they have a responsibility in the process as well, and their responsibility could impact the closing timeframes as well. This next slide, I sent this out actually as a form that you can include in your buyer presentations, or just hand them to buyers as you have them in your sphere of influence. Send them out. You could even post it on your social media sites as well. But it's the golden rules of the loan process. The one I sent out actually has 10 of them on there. This is just for your benefit. But again, really, the most important things: don't buy new cars, don't quit your job or change jobs, don't switch from a salary job to a commission or bonus based job. Don't transfer large sums of money. We don't want to see a lot of activity going in and out of the bank accounts. And don't forget to pay your bills. That's obvious. You would think. Don't open new credit cards, even if they're getting 20% off. The reason I put the even if they're getting the 20% off is because new home buyers want to furnish their house and they want to buy appliances. And Home Depot and Lowe's notoriously give discount if you open a credit card in order to purchase those. Even if a buyer is paying cash for that appliance, but they open that card, it is now new debt that is open, and we have to go back and vet that debt. Don't accept any cash gifts without filing the proper gift paperwork. Really, what that means is don't accept any cash without talking to your lender first, and don't make random undocumented deposits into your bank account. If you won the jackpot at the poker table, do not deposit that money. We cannot verify its source. So these are just a few of the things that are going to help you to make the process a little bit smoother. And again, clear communication, checklists, and setting proper expectations are going to go a long way in keeping the process smooth.